Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Cindy Crotty, Senior Vice President at KeyBank, about their most recent survey of middle market sentiment and what the future holds for growth, M&A, and the economy as a whole.
There's kind of an unusual disparity that I've seen in several bits of research regarding middle market companies, that when you ask them about their own company, they're much more confident about their own company than they are the economy as a whole. And I find that to be interesting because, I mean, that seems to be a very, very common sentiment. To what do you attribute that? I mean, do you have any thoughts on that?
Well, you know, in some ways, when I've thought about this as well, because we do see that pattern in this data. I think to be a business owner, you have to be a bit of an optimist, right? So you have to have the confidence in the strategy that you have, your people, your team, your product. So I think there's an element of that in their view. Plus, it's closer to them. They have more visibility around their own business than they do around what the state government and the economy is, you know, related to that, and certainly around the U.S. government and the broader influences impacting that. So I think that's part of it. Yeah, but that's certainly been consistent in the data.
Yeah.
And, you know, the good news in this last wave was that there was a lot less negative sentiment overall. The positive is improving, but frankly not at the same rate that the negative was declining, if you will. So to me that was a real positive, and I think we're starting to see maybe that too, and some of the economic data points that, you know, are being released now. So
yeah, you know, there's the lack of activity on the mergers and acquisition front, which you make note of in the report, is really astonishing to me when you really think about it. There is so much money. I mean, the private equity groups that I talk to are almost panicked because they've got to put some money to work, right? And it's just both on corporate balance sheets and in the equity world. It's astonishing that there hasn't been more M&A activity, you know, in the last few years. What do you think about that?
Well, you know, it's a trend, frankly, that I've been predicting for the last 10, that, you know, that was really going to pick up with intergenerational transfers and all that need to happen. We did see a bit of a spike in the fourth quarter, and that was in, you know, some of the data here that we had, and just in our own bank, we saw a fourth quarter with the tax law changes and all that. That pulled forward probably a lot of activity. But given, you're absolutely right, the cash reserves, I mean, we see that, frankly, again, in our balance sheet and our deposits here. It's amazing. It's astonishing. I don't know what the new normal is going to be for companies and liquidity, but it's, you know, it's billions and billions of dollars that people are sitting on right now. And it just goes to the fact that it's still not clear to people with a 2% GDP how things are going to shake out longer term. And until they have that certainty, they're not going to take the risk of integrating any sort of acquisition. I frankly thought we would have seen more on the sales side than we have, just people getting out when they could. And I still think we'll see that has to happen. I mean, it just has to happen at some point. So maybe it's 3 years from now. But it's an amazing phenomenon right now, given the low interest rates, the amount of cash, the valuations that most private equity would be willing to pay, given, you know, the cost of capital being relatively low. We're all scratching our heads. Although I think there's pockets of activity, and you know, it's just not as broad as one would think it should be.
No, I found another finding from your reports that, I mean, it's perhaps related to this, or maybe is explained in the same way. I thought it was interesting that companies apparently are planning to expand by increasing headcounts rather than through, you know, what I'd call capital expenditure type investments. That's, you know, the same reason there. Is it people are not excited about sort of longer-term CapEx expenditures because they were uncertain. It just struck me as being an interesting finding.
Yeah, well, I was frankly encouraged by that given the unemployment rate. So that was a real positive in that sense. But, some of that I would attribute, just based on experience, the fact that they've really cut back over the downturn. And now they finally have enough visibility in their own demand revenue stream to be able to start adding back again. I think there's been a reluctance the last couple of years to start adding because it was just so painful, the process many of these companies went through when they had to reduce staff levels. A lot of these companies still have very much a family feel to them, and it's tough when you're in these communities and all to have to go through reductions in force or whatever you call it,
Sure.
companies. But, we were encouraged by that, and I'm actually looking for the change from the last. It went from 55% to 61%, which was a nice increase. One of the things we've talked about recently here, if we could probe maybe on the next survey, is are they finding the skilled employees that they need?
Right.
Because I hear that anecdotally. I don't have any good data points on that, but I think that's an important element given the number of unemployed people that we know are still out there.
Yeah, I mean, I've had those conversations both with CEOs and with folks like yourself, professionals, experts in the field, and I've heard these same stories that there seems to be a dearth of skills for a lot, particularly for manufacturing firms. There seems to be a very difficult time finding the right skilled labor more than anything else, and that's concerning. Obviously, with an unemployment rate as high as we have, that could be a constraint to growth. So I think I agree with you. I think that's a very worthwhile thing to survey. Okay, we have to talk about it. It's because obviously it's in the news again. Obamacare.
Yeah.
Obviously, there was some consternation and some worry from the folks you surveyed on that score, and healthcare just in general. And now that they've pushed back the employer mandate, what are you hearing? What do you think?
Yeah, well, I think they pushed it off. So for now, maybe people feel a little bit better about that, but it's still out there. That was a very big concern. 62%, I guess, about the cost to provide it, and then the ongoing ability to continue to provide health care. There's so much unknown about it, and as well as I do, the CEO's certainty, is important to have that clarity to be able to plan for the future, and not being able to assess how much it'll cost and the implications of that is somewhat of a paralyzing effect on people's willingness to do things.
Right.
So, I think it helps for now. So anybody that was planning to hire somebody in the next 6 months or so, they'll probably go ahead and do it. But, we'll be back here again in a year. And who knows?
Yeah, right.
Hopefully there'll be more clarity, though, on the cost and implications of this.
Yeah. I mean, in terms of the, again, thinking about inhibitors to growth, have you heard, leaving Obamacare aside, obviously the regulatory state is continuing to expand. Have you heard other comments, either anecdotally or through the data, regarding other kinds of regulatory issues that people are worried about, or tax issues, I guess, would be fall into the same kind of boat?
Yeah, well, again, based on cap and trade, the energy regulatory side for manufacturers is always an issue. Coal issues. I think with the national debt sort of off the page for a while, it's going to be coming back again here in another 2 months or so, when we're dealing with that again, and the implications of potential new tax regulation or tax changes that could hit businesses. That's always a concern. Always a concern with every business owner. And we just saw at the end of last year how that moved sort of some of the M&A market for us. So, I think people are going to be watching very closely what's coming out of Washington on how we cure the debt issues, because taxes are going to be one part of that equation.
Right, right.
And that continues to show up. More than half the people are extremely or very concerned about the size of the national debt and annual federal budget and plans to raise the debt ceiling. That comes out in all this data.
This may be in the report, and I may have missed it. So if I did, I apologize. Are the companies that you're surveying primarily domestic focused, or is it a mixture?
They're domestic focused, but about 24 or so % of them have concerns overseas. Because
that's the expansion plans. Again, I noted that there seems to be a much more aggressive, maybe not much more, but a more aggressive attitude towards expansion. And I was wondering if you have any data or again, any anecdotal thoughts with respect to global expansion versus domestic expansion.
63% of this said they were impacted by what's going on in foreign markets. So whether that's on their supply chain or their labor costs or, just overseas sales. So they did improve, though, in their view of the impact, so less impact than in the past. And that is probably just because there's a lot less noise out there. But with China slowing, China continues to be the one market that they're most impacted by.
So I guess, in general, how would you sort of sum up, the information that you're finding regarding the middle market? How would you, what's the headline?
Well, that looks like the second half will be better than the first half, and generally speaking, the sentiment is improving. There's a lot less negative feelings about the economy and businesses than we've had in the past. So overall, I took that to be much more positive, the optimist in me, much more positive than we've seen the last two survey rounds. Clearly not robust. Not robust for any of us that have been around for a few cycles. This doesn't look like anything we've ever experienced, but it's clearly improving, and that's a positive.
Be sure to check back for future editions of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.